Good morning from Washington. Mr. Rubenstein, thank you so much, and good afternoon for the people in the Gulf region. I will do an attempt today. Trying to host the host is a big challenge, and I will try to do my best today.
I'm sure you'll do a great job.
Thank you. Thank you so much. Thank you for hosting us, and it's always been great having a wonderful relationship with you.
We've had a long-standing relationship, and I'm very honored that you would come to our offices in Washington, D.C. We're on Pennsylvania Avenue, the famous Pennsylvania Avenue, and we're now in the Carlyle offices. I've been in your offices many times, and thank you for coming to our office.
Thank you. Mr. Rubenstein, we cannot start a discussion without looking at the geopolitical, looking at what is going on around the world. The world we live in today has some similarities with the world when you started the firm about 40 years ago. At the times of Carter, higher inflation, the U.S. economy was doing well, and so forth. Now, we are getting into similar situation with the oil prices and so forth. How do you describe this area versus compared to the previous area?
Well, when I left government, we had the U.S. government was going into a recession, and there were high energy prices at that time, and inflation was very high. Today, I would say inflation is a little bit under control. It's not unduly high. It's probably now about 3.5% or so, higher than the Federal Reserve would like, but lower than it was just a couple years ago. The U.S. economy is growing at about 2.5% a year, which is not bad. Could always grow a little bit more. There is uncertainty about the war in Iran. Whenever you have war, there's uncertainty, and what business people don't like is uncertainty. They like predictability. So I think until we get the resolution of the war in Iran, I don't think you're going to see the stock market going up dramatically, and I don't think you're going to see unemployment numbers or inflation numbers changing dramatically, but there's still some uncertainty, and the president's trying to deal with it, but we just don't know the final outcome yet.
The current environment is also going to experience a change in the Fed with potentially higher interest rate, which is not what the president wanted. So how do you see the new Fed chair maneuvering in this situation?
Well, the outgoing Fed chair used to work at Carlyle, Jay Powell, and this today will be his last time as giving a press conference after the FOMC meeting. The FOMC meeting today is likely to result in no interest rate changes. The new chairman, I do know, Kevin Warsh, very smart man, he is committed, I think, to trying to lower interest rates, but I think it's going to be difficult for a while. But until the war is over and until inflation comes down a bit more, I think it may be difficult for the Fed to lower interest rates in the near term. Obviously, he would like to lower interest rates over the period of his time as Fed chair, but I think right now the consensus in the United States is that the Fed will not lower interest rates today.
The U.S. is experiencing a $36 trillion. What is the way out of this? How do you see it playing going forward?
The debt that the United States has is unfortunate. It is growing about $2 trillion every year. We're able to finance it because we are the only reserve currency in the world, so people want to buy dollars, and when people buy dollars, that enables us to finance our debt. We're now running a debt every year. Let's say the U.S. budget is about $7 trillion a year, and about $2 trillion, a little bit more than that, is debt. So that's hard to do on a sustained basis. At some point, it will end, but I don't know when it will end. For the time being, the U.S. economy seems to be able to absorb the debt, and it doesn't seem as if it's causing an undue problem in the United States.
Reserve currency. Our region is pegged to the dollar. Our investors look at things always in dollar. Is that sustainable? What about BRICS? Do you see any potential, the renminbi, etc., as a reserve currency?
Historically, when you've had a reserve currency, and there's one reserve currency, let's say at a time, the Dutch guilder in the 1700s, the 1800s, let's say the British pound, now in most of the 1900s, the dollar, you find that people who have a reserve currency tend to take advantage of it, and they borrow a lot of money. When you borrow a lot of money, eventually it comes home to roost. So the United States has borrowed a lot of money because we're the only reserve currency. I don't know that we'll be able to be the only reserve currency for the next 50 years. Today, I think the RMB is not a reserve currency, and China is not yet likely to make it a reserve currency. The euro has not turned out to be a reserve currency yet either. But I suspect 10 years from today, 20 years from today, there will be at least one other reserve currency. I don't know what it will be. The U.S. government is not likely to be able to be the only reserve currency for 100 years. But I think until we find another reserve currency, I think we're going to be able to still borrow a reasonable amount of money.
I'm not going to date you here, but you and I have lived the mainframe, the PC, the internet, and now we have the AI. How do you see the economy in the US, at least to start with, being impacted 5, 10 years down the road with AI?
Well, it's an interesting phenomenon. We lived through the internet phenomenon as it grew. I remember there were times when you and I would not have a cell phone that we could talk to anybody in the world and see anything going on in the world. Today, because of the internet, we can use these cell phones. AI is something that is really at the beginning of its infancy. It's going to take years before we know the real impact. Many people are concerned that AI will lead to unemployment because AI will replace a lot of people that are doing certain jobs. It's too early to say. Nobody really knows yet. There's now a race in the United States to build these gigantic data centers that can process all the information. I just don't know whether it's a little bit of a bubble or whether actually it will transform life in the way we know it. I just don't really know. I don't think anybody knows right now. I do think that people should be cautious about the valuations from some AI companies, because if you put AI on your company's name, all of a sudden it has a higher valuation. And also remember, the United States is leading right now in AI, but China will be a very big competitor, and we don't really know how to factor in how significant China will be in the whole AI world.
Your firm have been extremely successful in the private equity, then you went into the real estate and now into the credit market in recent years. Number one is, which of the three do you see the most interesting part in the coming 5 years?
Well, I'd say private equity is doing reasonably well, but probably the heroic rates of return of 20 or 30 years ago probably not going to happen again because more competition and prices are higher. Private credit has been under some stress in the United States because a few private credit firms have had some defaults, but I don't think it's a systemic problem. It's going to hurt our economy that much. On technology is clearly the wave of the future. People don't know which new technologies are going to be dominant, but I'd say there are 3 technologies that are going to change the way we live, in addition to what we already have. One is clearly AI, and people are already talking about it in all the data centers. Another is something called quantum computing. Quantum computing is computers that are 1,000 or 10,000 times as fast as current computers, and when they develop more fully, they will probably change the way we live as well. And then there's something called fusion, which is the effort to get energy that doesn't cost a lot of energy to produce it. And if you can ever get fusion to work, I think that will transform the world dramatically as well. Fusion is probably 10 years away, if not longer, and I would say probably quantum maybe 5 to 10 years away. But in our lifetime, assuming we live a reasonable life, we'll probably see the benefits of it.
Secondaries have picked up significantly in the last 5 years or so. How do you see that impacting the private equity, especially people looking at a shorter duration and maybe close to the same returns?
The secondaries business has been one of the most successful businesses the private equity firms have been engaged in. There are probably 8 or 10 really big secondaries firms, and they do 3 different things typically. One is they buy secondaries from other private equity sponsors or firms that own them. Second, they finance deals as well. And third, they do co-investments. And those things have all been really attractive for people. In the secondaries business, you don't have the J curve that you have when you invest in a private equity firm, because the money's already been invested and you're beginning to exit when you buy a secondaries position. The rates of return have been in the mid to high teens over the last couple of years for all the major private equity firms that have secondaries businesses. We own AlpInvest, and they've had very high rates of return, 16 to 18% in a lot of their key funds. So it's one of the most attractive businesses that anybody in the private equity world owns now, which is secondaries businesses.
Let's move to Europe. I would like to hear your views on Europe. Europe is way behind in AI, etc. So how do you see Europe in the coming 5 years?
The greatest place in the world to spend the summer is Europe. There's nothing that competes with being in the Mediterranean. And the food is great in Europe, and the museums are great in Europe, but Europe has probably lagged behind the United States as a technology leader. So if you think about it, the technologies that you need to get through the day are basically American technologies. You have Google or Alphabet, you've got Meta, you've got Microsoft, you've got, let's say NVIDIA. These are technologies that are really American-born and American-run. There are very few technologies today that really depend on a European company. I'm not quite sure what the reason is, but Europe has lagged behind. And I think if Europe is going to be a significant factor in the future in terms of the global economy, it's got to develop more technology companies that people around the world want to use, has to be more receptive to entrepreneurial instincts and so forth. But on the whole, right now, I would say European economy is lagging a little bit in the United States in terms of growth and lagging in terms of technology development.
If we ask the same question about China, China obviously is not the thing for Americans today as an investors, but over time, and especially given President Trump upcoming visits to China, how do you see this is developing?
Well, after World War II, we went into a bipolar world. It was the Soviet Union and the United States rivals. We were political rivals, geopolitical rivals, military rivals, not so much economic rivals. Now we have a bipolar world, but it's really China and the United States. And China is a rival not just in geopolitical things, but also in technology, economy, and so forth. So the United States has a complicated relationship with China. We buy a lot of products from China, and we actually have Chinese buying a lot of our treasury bills. And I think it's a symbiotic relationship. We're kind of dependent on each other, but clearly there's some political concerns that have to be dealt with. President Trump will go to China and see Xi Jinping in the not too distant future. Xi Jinping has done a very good job, in my view, of fending off some of the concerns that President Trump has had. Xi Jinping basically is now casting himself as the leader in the world who is reasonable, rational, easy to deal with, understandable. And I think that's made him being able to be a very effective global leader. I think right now people aren't talking about China invading Taiwan. They're talking about China as an economic power and a growing economic and geopolitical power. So I think the United States and China will have to come to some kind of understanding about how they work with each other in the future.
If you have, obviously today the alternative is accessible, much more accessible than the past for retail investors, etc. If you have $1 million for each of your grandsons and you would do an asset allocation, what would that look like?
Well, I think the conventional way that people manage money is you had traditionally what's called a 60-40 ratio. 60% would be in equities, public equities, 40% in fixed income. When private equity and private investments came along, that began to take 5% and 10%, 15%. Today, for most endowments and people that are managing money in that kind of fashion, you probably will have 20 to 25% of that allocation in some kind of private alternative investment vehicles. That would be private credit, private equity, venture capital, growth capital, distressed debt, other kinds of things that are likely to yield mid to upper teen rates of return. So for my grandchildren, I would like to have them have probably 50% in public equities and public fixed income, and maybe 50% in alternatives, because I am a big believer in alternatives, and obviously I'm an alternative investor, but I think alternatives are still going to be, for the next 5 to 10 years or so, outperforming public equities and public fixed income.
And if you would do that geographically, what would that split be?
The United States and Western Europe are roughly 2/3 of the private equity market generally, so that's probably the easiest place to invest. The so-called emerging markets, now called the Global South, is a place where people can get good rates of return, but the risk reward is probably higher than it is investing in the United States and Europe. So if you worry only about risk reward, you might not put so much money in the Global South. On the other hand, the Global South does have some very attractive markets. Your country, Saudi Arabia, is a very attractive place in which to invest, as is many of the other Gulf countries as well. So increasingly, I think people will put money in the Global South, in the Middle East, the Gulf Cooperation Council countries, and also in Southeast Asia. And to some extent, I think Africa is a place that has a lot of appeal as well.
Mr. Rubenstein, thank you so much for your time. I really appreciate it. I know you have a very busy schedule.
Well,
so
thank you for your support and help over the years and introducing me to many interesting things in your country. And it's my pleasure to be here. And thank you for coming to our offices.
Thank you. Thank you very much. All the best.